So what are some of those high risk, high return investments that you could get into today and make lots of money, or you could also lose money? It's always both sides. It cuts both sides. I'm saying this because a lot of people do come to me and asking me about, get rich quick schemes, which I don't support at all. But of course, there are normal, regulated, high risk investments that you can get into and still make good money. You just need to be sure of what you're doing. You need to know what you're doing. And you also need to have a portfolio that can actually support that high risk investment. I do tell people, don't go into an aggressive portfolio before you have a proper foundation to start investing in such things. But of course, there are normal investments that could be higher risk than just others that are more average. Like I've done one on low risk. You can check that on my YouTube. I've done one on medium risk, I believe. And therefore it means when we go high risk, it just means you're basically going a notch higher. I'm not saying you're going to start gambling, which I can never support. I'm just saying when you start investing, sometimes you will have to invest in much more riskier investments that will also give you very good returns. Here at Ken's Money Matters, we talk about the money mindset, how to make that money, how to enjoy that money, how to manage that money, how to invest that money, and how to assure yourself of a lifetime of income. Basically, financial freedom. That's the journey. That's the journey we are on. So welcome to Ken's Money Matters. Hit the like button, guys. Comment, share, but please try and interact with the video so that we can push the message out there. It's 2022. Let's do more. Let's do more. Let's do more, guys. So the high risk, high return investments that you want to look at. Before we get into the specifics, what are some of these characteristics of these high risk, high return investments? How do you know that an investment is high risk, high return? Number one, some of them are usually very volatile. So for example, Bitcoin that was recently at almost $70,000 a coin, and now it's gone almost to 40,000 a coin. It's wiped off billions and billions off the market in a very short period of time. That volatility can sometimes tell you that an investment is high risk. Cryptocurrencies are generally high risk investments, and I'll mention that later, but I'm just trying to tell you that that is one way you could actually tell, because you could find that one day the price is way up there, the next day the prices are falling and people are selling off their positions, scrambling off the market. That is a high risk investment. Number two, some of them are not properly regulated, which is the same again with cryptos, that there's no proper regulation around it. There's no proper way of them being accountable, of these institutions that run these investments being accountable. So such investments, it would mean that you are taking a lot of risk, in that if anything were to happen to that company, you do not have any recourse or any redress. Therefore, it becomes a very high risk investment. I do not say that they can't give you returns. They can give you amazing returns. People have made money out of crypto. They can give you amazing returns. If anything were to happen to you, like we have seen happen in some cryptocurrency companies or fake crypto companies or fake wallets and stuff like that, there's no way you can actually find proper recourse in court of law. And therefore, it becomes much more risky if you put your money in there because you have no recourse. When you do other more structured investments, there's always recourse to it. And then when there is a possibility of you losing all your investments, so most of the time when you see a real possibility, or you have seen a real possibility of you losing all your investments in just one go, you will know that's high risk. And there are some investments you get into, but you know that there is a risk of losing all your money. So if there is that possibility within a short period of time, that's a high risk investment. Then of course, return. I always tell people the rate of return. If someone is selling you a very high rate of return, you need to ask them, where do they get their money? Personally, when I'm investing in your business or anywhere else in any product, I need to know how those people are making their money. If it is fees they are charging me on my investment, if it is higher returns they're getting from somewhere else and therefore they give me much less and they get the difference, which is okay. But I need to know, how is this company making their money? That's why I don't go into very high yielding products that do not have very clear record or clear track of how they make their money. So someone could tell you, oh, I'll give you 50, 60%, but I want to know how you're getting 60% for me and what are you getting out of it? You know, if you tell me that one investment is giving me 10 or 14%, another wants to give me 50%, probably they're investing in the same things. I start wondering, what could they be investing in that could give them that high return that the other people haven't known yet, or I don't know yet. So you always have to be inquisitive. Don't just take returns because someone is selling you some high returns. No, you have to be inquisitive. You have to do your own research. and you have to always be on the outlook for those who can just lie to you and want to con you out of your hard-earned money. So if you know that there is some excessively high return, you need to make questions. But again, some of them just give you high returns because they take very high risks, which is good to know. So you need to know that, yeah, I'm getting 20-30% because there's this risk that they're taking, and there's the possibility that I could also lose the money. So these are some of the characteristics of, this high risk investment. Some of them you also cannot even get your money out when you invest. So they tell you, oh, you have to wait for this period of time before you make your money or before you get your money. So it becomes hard to access your money. These are just some of the characteristics that could tell you, okay, this investment I'm getting into is high risk investment. Now, after knowing the characteristics of high risk investments, which are some of them that you could actually invest into, but you could get very good returns. Number one is Forex. Investing or trading Forex. So you could decide to trade it, meaning you become a scalper, a day trader, swing trader, or you become a position holder. Basically, you're investing in it for a period of time. People like George Soros have done that and made billions of money. So what you do in this case is that you buy currencies and sell currencies. That's it. So you can trade them, like I've said, or you can invest in them. But they are very high risk. Currencies are very volatile because they depend on so many factors. There are fundamental issues and, of course, technical issues that do affect the fluctuations or the volatility of currencies. They are more volatile. And it's also so difficult to predict the direction the currency is going to take because it depends on so many factors within that particular jurisdiction or where that currency is being used. So there are so many factors that could then affect the value of that currency. And it's important to understand that even if you get into Forex trading, which I do tell people all the time, it's a risky investment or a risky trade if you're trading, that is. Therefore, you need to have that information so you can make some really good returns. People have made billions and billions of money from Forex trading, from Forex investing, but they take very high risks. There's the possibility that you could lose all that money. So Forex investing is a good one. It's a good skill to actually have when you're trading because you can make very easy money, very quick money, and can be a good side hustle, a good skill to have. But you must also be aware of the risks. I never sugarcoat the risks. I say, it's a risky investment. And if you don't know what you're doing, if you don't have enough knowledge and information, then you're going to suffer badly. And then the next one is basically option trading or option investing. I don't know how you want to call it. Investing in options is a way in which you can take very risky moves. Now, it's basically a contract that you have that you will sell a particular product at pre-agreed price at a specific date. Now, the rest will now depend on the movement of the stock, how far the price moves, and what direction that price moves. So these are some of the factors that you will consider when you trading or investing in options. It's a very popular thing. It's more like just investing in stocks or trading stocks. Options are much more risky, I would say. They're almost as risky as Forex trading. But options, and sometimes I would say options and futures, are really good ways of making money. There are people who have made millions and millions of money trading and investing in options. This risky, you must know what you're doing, you must have the right skills. And remember, you always having an underlying asset with every option. So you must know what underlying asset are you putting your contract on. So if you're having a contract, that contract is usually based on an underlying asset. That underlying asset can be a very risky asset, can be a very volatile asset. But options trading is a risky one, but very, very, very good way of making quick money if you want to make very high returns, or if you want to get rich quick like most people do say. Of course, it won't make you rich overnight, but if you make the right deals, there are people who have made millions overnight. Then number 3 is penny stocks. Penny stocks are those stocks that trade at less than $5. I know a lot of people who do trade in penny stocks. They only look for penny stocks, small stocks. And there are some people famous on the internet for always trading these things and making millions and millions of money. I'm sure you would know some of them. There are people who have just traded penny stocks all their lives. That's what they do every single day. So these penny stocks, first of all, you do have to do research to find them, because they are not known, they're not obviously known. So you have to find these penny stocks that trade at less than $5 a day. Sometimes they have no volume, so you need to really wait for long before, if you are trading it, then you have to wait before it meets your target. And then there are so many risks, like, of course, you not knowing the company well enough, not knowing the management well enough, not knowing their details, like their financial well enough, not having access to more information about these stocks. So basically, you're just trading it probably based on technical analysis, but they are very volatile. Most of these penny stocks are very volatile. One day they come out, they big it up, and then it goes high, and then the next day, everything just falls flat on your face. penny stocks are risky to invest in or to trade, but penny stocks can also make you money because nobody knows about them. And if you find the right ones and you find the right move, it's like a small company basically, then it goes with you to the moon. It's like when you find Bitcoin when it was still trading at basically nothing, you know, and then you bought it at that time, then it goes to the moon like it has. So penny stocks is the same way. It can go all the way to the moon. It can also go flat completely, like zero. I know people are stuck in some penny stocks because they can't get out. It's basically trading at 0.0 something. You know, you lost all your money. You're just basically waiting with hope that one day that penny stock will get back up again. But penny stocks, I know people buy lots and lots of shares because they're usually very cheap. So you have someone who has like hundreds of thousands of shares of penny stocks. If one goes well, they make really good money, or if any of them goes well. But most of the time they stay down. So if you look at their portfolio, you just have so many penny stocks, so many shares, thousands and hundreds of thousands of shares, but nothing is happening. It's because these are penny stocks. Some people trade them, some people invest in them depending on what you want, but still they're very volatile, very risky investment, but can also give you very high returns if it goes well for you. The next one I would say is corporate bonds. Now, corporate bonds I mentioned in, medium risk investments, but corporate bonds can also be high risk investments because sometimes the company you're investing in may not actually give you all the information about it as you would want. So sometimes access to information becomes a problem, especially in Africa. So you end up investing in a corporate bond, which is offered by the company, and then you do not know so much about the company. So if the company goes down, you realize, oh, the company was not regulated in a good way, or this corporate bond was not actually accepted or regulated properly. So these are some of the things that investors have to deal with. But corporate bonds can be good when the company offering it is willing to give very high returns. But sometimes they're giving those high returns, but they know how risky it is for them because they might not be able to pay back that money that they're borrowing, and that becomes very risky. So when you're going for corporate bonds, of course, it will now depend on what type of company is offering. It will depend on what type of company is offering those corporate bonds. And you need to always know the details of the company, the history of that company, the history of their corporate bonds, why they are raising money, and the possibility that it could actually go down. They are high risk, but they can be much more higher returns than normal treasury bonds because, of course, it's the company trying to woo investors into their dream or their plans or strategies. But this is something that can be very risky based again on the companies. Then we have venture capital trusts. This is venture capitalism. This is whereby companies invest in very small growing companies. So a fund manager or a wealth manager or an investment manager invest in small growing new companies. So they pick them based on certain parameters, certain evaluations, and then they hope that these companies will do well. Venture capitalism is a big thing. It can actually make you rich very fast because then you find companies before they actually make it to the listed stock market. So you basically find small companies before they even get known, they get listed onto the stock market and hope that they will make it big and even get listed into the stock market. And when they IPO, which is the initial public offering, then you make, boom, good money, right? But venture capitalism can be very risky, extremely so, because you have to know that this company will make it big. Out of all these big companies that we see that make it big and are all in the media, are in the stock markets and stuff, we are not told of the thousands and thousands of companies that died at the nascent stages. So when you see 10 that have made it to the stock market or to the main media or to the mainstream, know that there are many more that actually did die. So that's one thing that people never know. So you need to remember that there's a very high chance that the company you're choosing to invest in could actually die. Lifespan of a company could just be maybe 10 years or even less, or 7 or 5. And therefore within that period, the company is dead and it's dead with your money. And most of the time, it's very hard to have recourse because if the company is declared bankrupt, for example, or it just dies completely, it can't manage its finances, it can't manage whatever it's producing, it can't manufacture anymore, then the company cannot just exist anymore. It just financially it can't exist, economically it can't exist. And therefore, if you are investing in that company, then you lose all your money. So it's a good way of making money though, because if you invest in a company that makes it big, then chances are you're gonna hit the jackpot. So venture capitalism is a good way to invest, really good way in Africa right now. Fintechs coming up, data companies coming up, so many tech companies that are really making good money. If you invest into them at very early stages, you could make big money. I mean big money. But of course, there's the risk of not knowing what will happen. Then of course, we have what we call spread betting and CDFs. CDFs are contract for differences. Spread betting is basically you're betting on the direction of a particular commodity or stock or Forex or whatever. So spread betting is common in the UK, whereby you bet, it's just betting on the direction of a particular commodity in the market. And this can be very risky. It's almost same as contract for differences, where again you have a contract with a broker and you predict the direction that a particular product will take or a particular stock will take. So it's basically betting, but in this case you could be betting with a bit of informed knowledge, right? So it's more like stock trading, but in this case you're betting. So it's a very risky one, but can make you lots of money. Spread betting has made people millions and millions of money. So these are some of the risky investments you could get into right now. If you want to delve into some of them, you don't have more information, reach out to Ken's Money Matters for financial coaching. Remember, we have finance coaching and investment coaching. We take you through all these things. We tell you, based on your personality, this was best for you. So feel free to reach out to us for coaching. And please comment, share, and like. I hope this is helpful. Let me know. See you next time, guys. Thank you.